Well, the Federal Reserve announces later today if interest rates are going up again. The Fed is making that decision amid high inflation and turmoil in the banking system. CBS News business analyst, Jill Schlesinger, joins me now to break it all down. And Jill, we saw two banks fail recently. What would you tell people concerned about this happening to more banks?
Well, take a deep breath, because if you have less than $250,000 in any bank that is FDIC insured, you're safe. Something interesting kind of happened yesterday, actually, because early in the morning there was a real concern about First Republic. We see a lot of branches of First Republic throughout the tri-state area, so I think a lot of people are highly attuned to that. And there was some concern that the people who had more than $250,000 in that bank were just fleeing the bank, like $70 billion of deposits left. Yesterday afternoon, Treasury Secretary Janet Yellen made something a little bit more explicit. She says, hey, if there's a big problem at any bank that we think is going to pose a problem in the overall system, we are going to step in again and insure deposits above $250. She didn't say, chill out, First Republic people, but the sentiment was, I'm okay, the bank should be okay, the government would step in and back up the depositors if things went bad.
Okay, so as you said, just take a... All right, we have seen, parts of the economy slow down in recent months. Could these banking issues push us towards recession?
Well, I think there is a real issue around that, because when you have banks that are worried, what do? They pull back on their lending. They say, oh, wait, Cindy, we thought you were a good risk. Maybe today we don't think you're as good a risk. And so that's called tightening your lending standards. When that happens and there's less lending, there's less borrowing and spending. So there are some people who think that these banking situations, I don't even calling it a panic or a crisis, but it's like, it's a situation now, it's not a crisis yet. If that encourages banks to pull back on their lending, it could slow the economy down. And listen, we were already kind of a 50-50 for a recession this year anyway, so maybe it makes it a little bit more likely. But we're not there yet, and we're going to have to see.
All right, high price is still a problem, and the Federal Reserve has been boosting interest rates. Do you think that this banking situation is going to change things?
I think it could.
Yeah.
Okay, so if we wind back the clock, like 3.5 weeks ago, that is when Jerome Powell, the Fed chair, testified before Congress, and he basically was saying, hey, inflation's still a big problem. We may need to raise rates, buy more, and have them stay higher for longer. Now we are almost 4 weeks later. All this turmoil has occurred, and I think what the Fed is most likely to do is to raise interest rates by 1/4 percentage point. That would bring us to 4.75 to 5%. There are many people who think the Fed could pause today. We'll have to see. I mean, it's 2 o'clock Eastern. I know you're all excited about that, 2 o'clock Eastern, but I'll be watching that. And I think that it's going to be also interesting to hear what the Fed chair says, because he's going to have a press conference. We'll get a little bit more nuance. We'll get projections about where the Fed thinks the economy is going. I think it's just really hard to manage an economy in real time when these massive events are occurring.
All right, Jill, thank you so much. So great to see you every week.
I love it.
And you can see Jill regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell. For more analysis, go to JillOnMoney.com.